Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. This is going to be the final market call for this week, it being a Friday. Once again, my name is Ian Joseph, market analyst, HFM. Now, quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry, I'm here to help you comb the market the right way. Welcome once again. Now, we do have a few promotions that are running at the moment in the spirit of 15 years of existence in these markets, supporting you, the traders, with the right platforms, the right products for you to trade efficiently in the market. And we are having a few promotions, as I've mentioned. Now, did you hear about the Shield 500 account, whereby you have an opportunity to open an account with us called the Shield 500, whereby if you deposit anywhere between $100 and sorry about the technical difficulty. As I was mentioning, we do have the Shield 500 account, whereby you have an opportunity to open the account with us, deposit anywhere between $100 and $500, and whatever losses you do incur within the first 25 days, we shall refund you the full amount up to $500. Just a moment, I get my things in order. Sorry about the technical difficulty, okay? Now, we also have the Pure Gold giveaway, whereby you have a chance. If you do go over to the HFM website, application, whichever the case, go under promotions. We do have the Pure Gold giveaway, whereby if you do open it, it's going to take you to this tab, whereby we do have 12 days currently ongoing, meaning you still have a good shot at it, whereby you have a chance to join the promotion, the Pure Gold giveaway, trade 100 standard lot size in gold using any account type, hit the target and win 10 grams of pure gold. We are going to have unlimited winners on this promotion. There's not going to be a maximum number of people who are going to walk home with the 10 grams of gold. Now, not only that, we do have the Battle of the Elite, whereby you have a chance to become Kenya's Dawn. What bees claim the crown, stand a chance to win 650,000 Kenyan shillings. Now, the first person, once again, is going to walk home with $5,000. Number 2 is going to walk home with $2,000. Number 3 is going to walk home with $1,000. We are going to have 10 lucky winners in the lucky draw who are going to walk home with $200 each. Now, how do you join? Once again, you go over to your HF, if it's an application, or the website under promotions, Battle of the Elite, and join the promotion. Open a Battle of the Elite trading account and deposit at least $100. Trade any asset and rank in the top 3 traders by percentage of profit gained to win a cash prize. Now, we are going to have 10 winners once again who are going to be in the lucky draw, walking home with $200 each. Now, looking at the leaderboard currently at the moment, it's due to be updated, but looking at number 1 is muitalan@gmail.com, who has 121% gain on their account, and then number 7 has 1.2%. Meaning, if you just deposit $100 and you make $1.2, you are going to be on the leaderboard and stand a chance to win the prize pool of the 10 lucky draws. Now, today, once again, it's going to be a Friday. This is the final trading day of the weekly candle, whereby the weekly candle is due to close later on in the day, towards the end of the day, if you are in Nairobi. Now, looking at it from this perspective, where will you want to start generating ideas from? You've woken up in the morning, the best place for you to start is the economic calendar, and this is going to help you start generating ideas of what you're supposed to look at. Now, earlier on in the morning, we did have New Zealand dollar releasing their Morgan consumer confidence. Now, this is a very, very leading indicator, whereby we are looking at this data. It's going to look at how consumers are confident about the financial markets currently at the moment. The previous number was 92.0. The actual number came out better than anticipated at 94.6. which is actually really good. Now, the consumer confidence is released by the ANZ and is a leading index that measures the level of consumer confidence in an economic activity. A high level of consumer confidence stimulates economic expansion, while a low level drives to economic downturn. Now, a high reading is usually seen as positive or bullish for the New Zealand dollar, while a low reading is usually seen as negative or bearish for the New Zealand dollar. If you do click on the red official report, it's going to open a new tab whereby this is the official document that was released at that particular moment in time. Now, if you look at it from the link up here, it's anz.co.nz, meaning this is the official government document that was released at exactly that moment in time. Now, the ANZ Roy Morgan Consumer Confidence is a monthly measure of consumer confidence across New Zealand households and how this affects their spending behavior. During September, this is going to be data for September. The consumer confidence rose from 92.0 to 94.6 in September, unwinding the fall seen last month. Confidence was marked lower in the days following the release of the very weak Q2 GDP data. The proportion of households think it's a good time to buy a major household item. Very, very interesting. The best retail indicator rose 1 point to -11. Inflation expectations was steady at 4.8. Now, we have been talking about this in our live classes very, very often. And we are situated at Westland's 5th floor Oval Office off the Ring Road, whereby we usually look at this data and we look at seasonality. There are trends into how people usually buy and sell into the markets. When you look at seasonality speaking, this data is showing us that the proportion of households right now, they think it's a good time to buy a major household item. If they think of buying a TV, a fridge, or whatever else furniture, this is the perfect time for them to buy. Why? Because of the seasonality trend that we are in currently at the moment. When we are looking at the markets, the way the markets behave in January, February, March, throughout December is going to be very different. Now, looking at New Zealand currently at the moment, it's when the weather is really, really good. And as a result, we are seeing more money in circulation because of tourists, because of the perfect weather. Everything that is aligning to a good economy currently is happening to the New Zealand region. Now, this data is showing us that, okay, people are really spending. The consumers are positive about what is happening currently at the moment. Now, looking at August 2025, the consumer confidence did fall by 3 points to 92 in August, its lowest level in 10 months. The proportion of households do believe also it's a good time to buy a major household item fell 4 points to -12. Inflation expectations did fall 0.3 points to 4.8%. Now, looking at this data, how is this important to you as a trader? When you're looking at this piece of information, look at it. We have an orange bar, meaning this is moderate volatility that is expected in the markets. Whenever you see this data coming out better than forecast, it means that if I go to my charts, I need to look at more long opportunities on the New Zealand dollar. Now, the data that has been released of late has been very, very positive about the New Zealand economy, and this is what you would want to look at for you to ask yourself, if I was to go to the charts today, would I want to look at long opportunities or short opportunities on that specific currency? At exactly 2:30 a.m. today, we did have Tokyo CPI. Now, we usually receive 2 sets of data at exactly this time, whereby we have the core CPI and the CPI itself. Now, the core CPI is going to exclude food and energy, which are very volatile, and then the CPI itself is going to include food and energy. When we are looking at this information, the CPI is the Consumer Price Index, which measures prices fluctuations of goods and services purchased by households in the Tokyo region. The index is widely considered as a leading indicator of Japan's overall CPI, as it's published weeks before the nationwide reading. Now, the gauge excluding food and energy is widely used to measure underlying inflation trends, as these 2 components are more volatile. The year-on-year reading compares prices in reference month to the same month a year earlier, whereas a high reading is usually seen as bullish for the Japanese yen, while a low reading is usually seen as bearish for the Japanese yen. Now, looking at the data, the previous number was 3.0. Now, this was year-on-year data. September last year, CPI numbers were at 3.0%. We didn't have a forecast, and the actual number came out at 2.5%. So we can actually see that, okay, inflation has actually cooled down in the region of Tokyo, Japan. Now, once again, we usually have two sets of data that are released, the core CPI and then the CPI itself. Now, looking at the data, ever since May of 2023, inflation was around 3.9%, and we did see it cool down aggressively back to 1.8%, where we are currently at the moment. And when you're looking at the Japanese economy, it's the mandate of a central bank to find balance between consumers and producers, basically inflation and deflation, whereby they will want to see these numbers around the 2 to 3% region for them to justify lowering interest rates. But looking at the Japanese economy, it's very interesting because they are major net exporters, meaning they do thrive if the Japanese yen is weaker, because it's going to add more profits to the companies in terms of exports. Let's say, for example, if they have a weaker yen and they want to sell Toyotas, meaning the dollar is going to be stronger against the yen, which means they are going to get much more yens as a result. So looking at this information, this is what we want to see. And yesterday in the morning market call, we did receive data from the Bank of Japan the minutes meeting that was just held recently, and as a result of that information, we did say that okay, they're anticipating more incoming data to come in. This data is basically the CPI numbers that you anticipate. Now, Japan is due to go for elections on the 4th of October, whereby we anticipate a new prime minister to come into place, and we do anticipate them to bring new policy changes, and as a result of that, we do anticipate fluctuations in the Japanese yen. We are going to go over the charts in just a moment's time. What are some of the assets that you will want me to look into? Kindly put it in the comment section. I'll be glad to digest the data for you. Now, later on in the day, we do have personal consumption expenditures, very, very leading indicator of inflation in the United States. And this is the preferred data that the Fed Reserve usually use to gauge inflation in the United States. Now, it's released by the US Bureau of Economic Analysis on a monthly basis, which measures the changes in prices of goods and services purchased by consumers in the United States. The PCE index also is the Fed Reserve's, once again, preferred gauge of inflation, whereby the year-on-year reading compares prices of goods and services in reference to month of a year earlier. Now, the core reading excludes food and energy, once again, to get a much more underlying general trend of the market. A high reading is usually seen as bullish for the dollar, while a low reading is usually seen as bearish. Okay, and we shall look into gold in just a moment's time. Now, yesterday, if you are in my morning market call, if you aren't there, kindly go over to our YouTube channel, subscribe, go look at the previous morning market calls, whereby I usually have them at exactly 10 a.m. daily Nairobi time. And yesterday we did look at GDP numbers, whereby we had talked of, if it comes out positive, it means we anticipate, hello Victoria, we anticipate a strength in the United States dollar. While at the same time, if we anticipated bearish numbers, we were anticipating a weaker United States dollar. Now, GDP numbers actually yesterday came out slightly better than anticipated. And if I go over to my economic calendar, which was Thursday, as you can see, GDP numbers here, whereby we were having a forecast. The previous number was 3.3. The forecast was 3.3. The actual number came in at 3.8%. Now, this is very, very interesting. Analysts have been arguing about what's happening in the United States region, and I want to help you get a deep understanding of where we are currently in terms of the dollar. Now, looking at the previous two NFP numbers, they have come in actually lesser than anticipated, less than 100,000 jobs being created per month, which is the first time in 4 years we have seen such a thing happen. And the last time we were at this point was during the pandemic region. And we anticipated the United States dollar to be weaker, but at the same time, we are seeing GDP numbers coming out positive, better than anticipated. Yes, people could argue that, okay, people are losing jobs in the United States, but at the same time, the economy is growing. And as a result of this, we are going to look into the charts in just a moment's time to look at how some of the assets, including gold, including USD JPY, how do they react as a result of this information yesterday. Now, today we are going to have the PCE, once again, which is the personal consumption expenditures, which is going to gauge inflation. In the recent meetings of Jerome Powell, he did mention that, okay, we have been seeing inflation, but these costs are not being passed on to the consumers as of yet. And they would want to look at incoming data. This incoming data essentially is the inflationary numbers. If this data today picks up, we can say that, okay, as a result of the tariffs, we are seeing consumption expenditures move to the upper side because now the costs are going to be passed on to the consumers. When you look at the United States, they are very heavy on consumption. And this is the leading data that the Fed Reserve usually look out to. Now, once again, we do have a previous number of 2.9. The forecast is at 2.9. The actual number has not yet been released. It's going to come out at exactly 3:30, which is going to be in the next 5 hours, 9 minutes, whereby if it does come out greater than 2.9%, it means that consumers are basically spending money in the United States, which more dollars will be in circulation, and inflation is going to be high, which sometimes is good because low inflation means that not a lot of money is moving in an economy. If the data does come out higher than 2.91, once again, it means we will look at more buying opportunities on the dollar. If it comes out lesser than 2.9%, it means that we need to look at more selling opportunities on the dollar. Towards the end of the day, at exactly 10:30, we are going to receive the updates on the commitment of traders. Very important data that I usually like looking into, understanding how institutions have been positioning themselves over the past week. Now, the last data was updated was back on 16th of September, which was last week, Tuesday. We are going to receive data today evening from now 17th, which was technically Wednesday, from 17th of September till 23rd of September. How did institutions position themselves in the markets? We want to look at, did they buy more into gold? Did they sell more of gold? What about oil? Did they buy more of oil positions or sold oil positions? Looking at the British pound, also the Japanese yen, the euro, and the Australian dollar. Now, if you want to look at this information, the HFM website usually consolidates it into a much more digestible manner. But if you want to go to the data itself, you go to cftc.gov. So the CFTC essentially, which is the government website whereby institutions usually update their information. So under market data and economic analysis, you want to go to commitment of traders, whereby, let's say, for example, we want to look at metals and others, we want to go to the short format. And this is where we are currently at the moment on gold. Under managed money, we can see that institutions offloaded quite a significant amount of positions from September 9 to September 16th. And we are going to receive data now from September 16th till September 23rd, which was this Tuesday, whereby we would want to look at how institutions either added positions or offloaded positions in the market. Now, this is going to help us if you're a swing trader or a day trader. This information is very valuable because it shows you how institutions are positioning themselves in the long run perspective, which is going to help you understand the overall trend of the markets. Are institutions bullish or bearish on that specific asset that you're going to look at? Now, that's going to be for the data, but I want us to look at what is happening first on oil. We are going to start with oil today, whereby Russia did move to extend gasoline export ban until 2026 as shortages did persist. Now, Ukraine and Russia are still fighting, and there is a new tactic that Ukraine has actually come up with, whereby they would want to bomb oil production facilities in Russia. We did see earlier this week whereby Ukraine did send over 80 drones into Russia, and then they bombed the third largest refinery in Russia, which is capable of producing 355,000 barrels a day. GS Labor will look into that matter, okay? Which is very, very significant. Once again, the third largest producer of oil in Russia was bombed earlier this week, and as a result of that, Russia did extend gasoline exports, and we did see prices of oil move to the upper side, and this is what we will want to start with today, whereby let's start with US oil. So US oil and UK oil, they're positively correlated. Now, WTI oil, or known as US oil. Okay, this is Brent oil. I will want US oil. I don't have it here. Okay, let me add it. Okay, here it is. So US oil, as we have seen, ever since the Ukraine did attack Russia's inventory, it did affect supply and demand of the precious commodity, whereby prices was rallying to the downside, making lower lows, lower highs, lower lows, lower highs, lower lows, lower high. But it reached this particular point on the 23rd of September, whereby this was Tuesday. We did see prices form a bottom. This low failed to break this low. And during the day, the course of the day, prices rallied to the upper side and closed well above the opening price of that specific day. And ever since, prices has been making new higher highs, higher lows, previously breaking the high that was formed back on 16th of this month. Very interesting. Could we see more opportunities, long opportunities on oil as a result of the supply disruptions that is happening currently in the Euro region? Now, US oil is usually the refined oil, whereby you're going to get the natural gas and so on and so forth. But UK oil is usually crude oil. Now, they are positively correlated, whereby if you look at price action, they more or less closely mimic each other. Now, looking at USD JPY, I would want to start with USD JPY, then we go to gold. Ian did mention he would want us to look at gold. Now, looking at dollar yen, for the past few hours, ever since last week, Wednesday, we did see prices move to the downside. Now, this was during the interest rate decision by the Fed Reserve, whereby they did decide to lower interest rates by 25 basis points. We did see prices move to the downside, close aggressively to the upper side. Then prices started forming new higher highs, higher lows, higher highs, higher lows. Now, I want to focus to yesterday. Now, this was yesterday, whereby ever since Asian Open, we did see markets consolidate quite a while. And then this particular region here was where we were very interested in, whereby the GDP numbers for the United States dollar actually came in very positive, and as a result we had this massive bullish candlestick to the upper side, and prices closed well above the opening price of yesterday, signifying that yes, the dollar is still strong currently at the moment. Looking at the 10 period moving average is still, prices did move quite aggressively to the upper side, trading above the moving average. Now, currently at the moment, price is in between the moving average. We'll want to look at oncoming data, which is going to be the PCE numbers, which are due to be released later on in the day, whereby once again, if it does come out positive, it means the dollar is going to gain much more strength, and we might see actually more bullish opportunities before the weekly close later on in the day. But on the other hand, if it does come out negative and we do get a candlestick that closes below this region, there's a high possibility the weekly candlestick will come back down, retrace, then finally close. All of this is going to be dependent on the data that will be released during New York session today. And I do discuss about strategies that you can execute on the charts to capitalize on such movements. Once again, do follow us on our socials. We do update a lot of information catered to enable you find higher probability setups on the markets daily on daily. Now, looking at gold, which is a precious metal, we have been seeing ever since last week, whereby Jerome Powell did hint that, okay, we are not going to see as aggressive interest rate cuts as we thought we would have. This was the move to the downside. Prices did gain back on its overall trend. But once again, we did have the Fed chair releasing his speech earlier this week. I do believe it was on Tuesday at exactly 7:35. Yeah, it was around 7:35 in the evening, Nairobi time, whereby we did see prices of gold now change momentum. And one thing he did mention very interesting was that he did point out that stocks could be highly valued currently at the moment. And that was very powerful coming from the chair of the Fed Reserve of the United States, whereby he did mention that stocks currently at the moment are highly valued, meaning that it is overbought at the moment. Now, what did he mean by that? We are at all-time highs on the S&P 500, and we are going to look at that in the next asset that we are going to decipher. But looking at gold currently at the moment, we did form highs. This was Tuesday, around 3,790 region. Gold formed an all-time high. Then during the speech, we had bears coming into the market. Prices closed slightly above the opening price, but look at the next day what happened. We had prices form a high, but this high failed to break Tuesday's high. And then the markets rally to the downside. There was news releases on this particular Wednesday, whereby we did see the markets move to the downside quite aggressively, almost negative 1.5% to the downside. In 10 hours, prices moved over 560 pips, quite significant on gold. And then prices closed well below the opening price of that specific day. Then Thursday, which was yesterday, prices basically consolidated, but GDP numbers did come out stronger. We did have signs of buyers trying to push to the market. And currently at the moment, we are in this channel, and we would want to look at how prices are going to react. Some people this is a very, very good way to understand how price action is, whereby if you see prices constricting, let's take an example of a hose pipe. If you do press the front of a hose pipe, the volume of the water is going to be smaller, but the pressure is going to be higher. And this is what we are seeing currently at the moment, whereby prices are constricting, and you will want to look at a breakout either to the upper side or to the lower side. Now, depending on the data, look at where price action, look at today's opening price at the moment, whereby we have been in that consolidation. If we do break the yesterday's New York highs, late New York highs, we will want to look at long opportunities. If we do break the lows that was created during Asian session today, I would want to look at more selling opportunities. Now, this is going to be dependent on the data that is due to be released later on today, whereby we do anticipate once again very, very critical data. The preferred gauge of inflation for the Federal Reserve, which is the personal consumption expenditure, whereby if it does come out positive, it means that, okay, Americans are buying quite aggressively in the markets currently at the moment, and we do anticipate more dollars to be in the markets, and as a result, we anticipate strength, meaning there's a high likelihood we might break out the lows. But be very careful, because once again, today is Friday. This is the final trading day of the weekly candle, meaning we will anticipate volatility during New York session. Once again, risk management is going to be very critical for you as a trader. Looking at silver, silver has been holding above those highs currently at the moment. And once again, for the past few hours, I am looking at the 1 hour time frame. For the past 20 hours or so, prices are neither making clear higher highs or clear lower lows. Looking at today's price action, prices did open here, move to the downside quite significantly, but currently at the moment we are trading about the opening price of the daily candlestick, and we'll want to see if prices closes well below this region, depending on the data that will come out later on today. I would want to look at more selling opportunities on the silver metal. If we do close above this region, I would want to look at more long opportunities on the silver metal. Now, once again, this is going to be dependent on the data that we are due to receive later on in the day, first being the PCE, then we are going to have the commitment of traders, whereby we do anticipate to see how institutions have been pushing money from 16th, let's say 17th of September till 23rd of September, which the commitment of traders usually is updated every Tuesday, but it will be made available to the public every Friday. Yes, we can see prices did move to the upper side, and we want to see, did institutions buy more of silver or did they cover their positions? Now, looking at indices, if you want me to digest any asset that you want, kindly put it in the chat box. Follow us on our socials so that you can be updated each and every day. Now, looking at S&P 500, ever since that day, Tuesday, whereby we did see and hear from Jerome Powell, whereby he did mention that stocks are overvalued. And once again, that was very powerful coming from the chair, whereby we did see the S&P 500 ever since that day to yesterday's closing price, prices has moved more than 8,891 points to the downside, losing more than negative 1.33% of its total value in less than 53 trading hours. Currently, at the moment, we are still retracing at the moment, but we'll want to look at how institutions are going to digest this data, because if you look at it on a higher perspective on a daily time frame, the S&P 500 is at all-time highs, excluding the few 4 trading days that have passed. But currently, at the moment, the S&P 500 is doing really well, coming from these lows that was formed during April. The index has gained almost 38.99% in less than 120 trading days. This is the best run that the S&P 500 has had in over 10 years. And Jerome Powell did hint that, okay, these stocks are overvalued, meaning if our investors were looking at his information, they will start covering their positions, and as a result, we did see prices make a high, and this high failed to break the most recent high above this region, and prices continued moving further down and closed well below the opening price of that specific day. Then the trend started continuing also to the downside, whereby on Thursday, which was yesterday, prices opened, moved to the upper side slightly, and aggressively moved to the downside when GDP numbers did come out positive. And today, could we anticipate a similar price action playing out? Only one way to find out, depending on the data that is due to be released today. Let me go over if you do have any questions currently at the moment. Peter Sharago, well, thank you for being the first one to join. Okay, I do believe we have looked at gold. Okay, so hfm.com website says I've been blocked. What could be the issue? We shall get back to you. We shall get back to you, just boy. Okay, if there are no questions, we'll see you on Monday. Once again, risk management is going to be very critical on this closing day of the weekly candle. Always ensure that the goal number one of a trader is capital preservation. Always ensure that at the end of the day, you have an account that you can wake up to tomorrow. Technically not tomorrow, because tomorrow is going to be a Saturday, but I shall see you on Monday. Take care of yourselves. Stay safe. God bless.